Analysis Japan widens FX watch to encompass danger of yen spike as U.S. recession fears mount. Tokyo Japanese policymakers concerned approximately the yen sliding lower are an increasing number of also having to watch out for it rebounding, officials informed, signaling that currency market intervention is much less probably than a few investors anticipate. Japan has stepped up its warnings about sharp yen falls inclusive of a rare joint statement ultimate month from the government and the imperative financial institution making clean their readiness to interfere if a drop is just too speedy. While there's no alternate to that function of guarding in opposition to excessive yen declines, government are also turning their attention to the chance of a pointy rise inside the foreign money, mentioned three policymakers with expertise of the problem. The shift in recognition displays developing market fears that the U.S. Federal Reserve's competitive financial tightening to fight inflation ought to cause a recession inside the United States, forcing its important bank to sluggish interest fee rises. That, in turn, should pressure down the dollar in opposition to the yen, they said. There's a hazard the U.S. financial system may want to slide into recession, that may trigger huge greenback promoting, stated one of the policymakers, who all declined to be diagnosed. We want to fear approximately both the chance of a moderate dollar falls and dollar rises. Another of the policymakers stated the primary situation remained the recent sharp yen falls. But there may be also a need to maintain an eye out at the chance of a pointy rebound in the yen because the market's consciousness of interest adjustments, said the second one policymaker. The subject underscores how rising fears of a worldwide recession will be converting the way Japanese policymakers see the outlook for the yen, from a focus entirely at the danger of further declines closer to an extra-balanced stance. The growing attention of policymakers at the threat of a reversal inside the trend of a weak yen also increases the likelihood the Bank of Japan (BOJ) will keep its low interest fees. The divergence between Japan's low fees and the Fed's charge increases has been a key element driving the yen decrease. Some marketplace players have speculated the BOJ could regulate its clean policy to save the yen from falling further. But Governor Haruhiko Kuroda has disregarded that possibility, arguing that the vulnerable economy still wanted financial help. Red flag? Japanese policymakers have traditionally favored a susceptible yen over a robust one, as yen rises hurt exports by making Japan's items much less competitive distant places. But the yen's latest plunge to a 24-year low against the dollar has become a worry because it hurts households and outlets by inflating already rising price of imported gasoline and raw materials. Jawboning with the aid of Japanese officials did not reverse the yen's downtrend. Despite threats of intervention, Tokyo has not stepped in to prop it up. The emerging dual cognizance for policymakers underscores a shift in the market's apprehension approximately international recession, from a sole attention on growing fees. The U.S. financial system reduced in size slightly extra than envisioned within the first zone as a resurgence in COVID-19 infections curbed spending on services, elevating a pink flag for the financial outlook. Recession fears are also creeping into the taking into consideration European Central Bank policymakers, while they put together for the financial institution's first interest price boom in greater than a decade to reduce inflation. It's hard to expect the yen to hold falling at the current tempo in case the Fed's competitive price hikes will cool the U.S. economic system, said Yasuhide Yajima, leader economist at NLI Research Institute. If so, Japan does not want to do whatever to cope with the susceptible yen. Japan has evaded intervening in the foreign money market seeing that 2011, when it stepped in to arrest a sharp yen upward push after an earthquake and tsunami disaster battered the financial system. The closing time authorities intervened to prop up the yen become in 1998.